Hey everyone, welcome to Wealth Head. Today I'm going to talk about the ETFs that I plan to invest in 2023. Now, before I start, I'd like you all to know that none of this is financial advice, and please keep in mind that investing in ETFs carries some risks, just like any other investment, really. Now, it can be very difficult to predict which specific exchange trading funds will be best to invest in for 2023 or for any other year because there are so many factors that can impact the performance of an ETF. Now, it requires a lot of research to figure out where somebody wants to put their money in, and it can get frustrating for many people. Personally, I mainly look into the underlying holdings and the past performance of an ETF to get a sense of its quality and potential for future growth. I also like to diversify my portfolio because I'm a portfolio into dividend and growth ETFs and US and international funds because I'm looking for a combination of steady income as well as potential growth. Now let's get into the six ETFs that I plan to invest my money into this year. Now I'm already invested into these funds, and the idea this year is to mostly add on to these and to have a strong portfolio in near future. I have divided my buys or my potential buys into three tiers: tier one, tier two, and tier three. I'll be investing the least amount of money in tier three ETFs and putting in most of my investment in tier one funds. Now, this by no means mean that tier three ETFs are bad, but it's just that I'll have only X amount of money to invest, and I just plan it in a way that works out for me. Of course, I'm also investing in individual stocks and crypto separately, but more about that we'll talk about in next videos. Now, when it comes to tier three, I have two funds that I'll be putting my money into, and my plan is to invest no more than 10% of my total ETF investing into these three funds. Number six on my list is VYMI, which is Vanguard's International High Dividend Yield ETF. It tracks companies from developed and emerging markets, excluding the United States, and the stocks in this fund are expected to pay high dividends in next 1 year. The fund's portfolio is very well diversified across a range of sectors and countries. It has a total of 1375 holdings, with around 35% of them being from financial services. It is also important to know that it has very less tech and real estate stocks. Top 10 stocks comprise of less than 15% of total assets and include companies like Shell, Toyota, Royal Bank of Canada, HSBC, which are all solid businesses. It has a relatively low expense ratio of 0.22%. The latest dividend that I received from VYMI was in December, and it pays out every 3 months. It paid $0.6675 per share I owned, which means that assuming the dividend remains unchanged, then in a year I could get around $2.67 per share owned. Now, now let's move to number five. Fifth one on my list is Invesco S&P 500 High Dividend Low Volatility ETF, ticker symbol SPHD. This seeks to provide exposure to a portfolio of high dividend yielding, low volatility stocks in the S&P 500 index. This fund aims to provide investors with a combination of income and capital appreciation potential while also minimizing volatility. Now, before I say anything about this one, it's important to know that this is one of the best ETFs that I own, and it is a tier one fund in any other scenario except that I own a lot of this one, and it's currently the largest ETF holding in my portfolio. So the only reason it's in my tier three is because I want to invest more in some of my other favorite funds. So this fund's portfolio consists of 53 stocks that are selected based on their dividend yield, dividend growth, and historical volatility. Utilities and real estate are the top two sectors that this fund is currently invested in. Top 10 stocks comprise of less than 27% of total assets and include companies like Altria, AT&T, Kinder Morgan, and Prudential Financial. The expense ratio is 0.3%. What I really like about this fund is that it pays dividends monthly. So it's like a monthly income that I'm generating just for holding some of these awesome stocks. Last month, I received dividend at 0.1436 per share I owned. At this rate, this would pay me $1.72 per share owned annually. So these were funds number 5 and 6 on my list. Let's now move to tier 2, which have my picks number 3 and 4. In this tier, I plan to put no more than 30% of my total ETF investment for this year. So number 4 on my list is iShares S&P India Nifty 50 ETF, ticker symbol INDY. It's an exchange traded fund that provides exposure to a broad range of Indian companies listed on the National Stock Exchange of India. This fund consists of 50 largest and most liquid Indian companies listed on the National Stock Exchange of India. I truly believe that India has a large and diverse economy with a growing middle class and a number of sectors that are expected to perform well in the future, especially technology, healthcare, and financial services. The country has also made a lot of progress in recent years in terms of economic reforms and infrastructure development, which could provide a huge boost to its stock market. So, investing into this ETF is my way of being a part of this journey. This ETF currently has 60 of the largest Indian companies, with finance and tech being the top two sectors it's invested in. The top 10 holdings are 58% of the total portfolio, which include companies like Reliance Industries, HDFC Bank, and L&T, which are going to be front runners in Indian economic growth. It has the highest expense ratio out of all the ETFs in my list with 0.89%, and it pays dividend every 6 months. And based upon the last dividend I received, it pays me $3.2 per share owned, which I think is pretty good. Number three on my list is a growth ETF. I'm not into this one for dividends, but mostly for the appreciation of the stocks in the fund. But it does pay some dividends too. And this is SPYG. This provides exposure to a broad range of large and mid cap US companies with the potential of above average growth. The fund tracks S&P 500 index, which consists of companies that are expected to have higher earnings growth and price appreciation potential than the broader market. This fund consists of 228 holdings, with most of them being from tech and healthcare, which makes sense because that is where most of the growth potential is. As you can guess, top 10 holdings include companies like Apple, Google, Microsoft, Amazon, Visa, etc. And these are more than 37% of total holdings. It has a very low expense ratio of 0.04%, pays dividends every 3 months, and based on my last dividend, I'm getting currently 56 cents per share owned annually, which is the lowest out of all the ETFs in my list. Now, finally, let's move to the top two. I'll be investing heavily into these two, with around 60% of my total ETF investment going into ETF number one and two. So, number two is one of the most famous ETFs on Reddit, which is SCHD, Schwab US Dividend Equity ETF. It provides exposure to a broad range of US dividend paying stocks. The fund tracks the Dow Jones US Dividend 100 Index, which includes companies that have a history of consistently paying dividends and have the potential to continue doing so in the future. I love this ETF mostly because of the underlying businesses it holds. In its 103 holdings, finance and industrials are the top two sectors it's invested in. And the top 10 holdings include companies like Verizon, Pfizer, Coke, Home Depot, Lockheed, IBM. These are some businesses that I would really love to invest in as individual stocks too. But my problem is that whenever I go to invest in individual stocks, I end up putting my money into Apple, Google, Tesla, or something like realty income to get dividends. So this ETF gives me good exposure to some of the solid businesses out there. It pays dividends every 3 months, and based on my last payout, it's currently paying me $2.81 per share annually with a very low expense ratio of 0.06%. At present, I own very little SCHD, so the plan is to heavily invest in this one this year. Before we go to number one, let me know what you think of these picks and my planned allocation to these ETFs. If you like the video, please press the like button. And if you dislike the video, then also please press the subscribe button and let me know what you would like me to change. So finally, the number one ETF in my list is basically one of the most low risk investments that I put my money into. And it is VTI, which is Vanguard's total stock market ETF. This provides a broad exposure to complete US stock market. The fund virtually includes all publicly traded US stocks, so its portfolio is obviously very diversified across a range of sectors and market caps, and represents a convenient and low cost way for investors to gain exposure to the US stock market as a whole. So this fund has more than 4,000 holdings, with quarter of them from tech sector. Top 10 holdings include companies like Apple, Microsoft, Google, Tesla, Johnson and Johnson, and these make up around 21% of the total holdings of the fund. It has a very low expense ratio of 0.03%, pays dividends every 3 months, and is currently giving me $3.72 per share annually. So, this was my list. As with any investment, it is important to thoroughly research and carefully consider the risks and potential rewards before making a decision to invest in either these or any other ETF. It's important to understand that this is my list based on my risk tolerance. So please do your own research before you put your hard earned money into anything. Let me know in comments what ETFs you're investing in and what kind of investing related videos you're most interested in. See you all next time. Peace out.